Sylvia's Traders Lounge, in partnership with Scope Markets, welcome you to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Today's guest is Jane Gallina, and our theme is how stay-at-home parents can adopt trading full-time and have a consistent and successful trading career.
Jane Gallina's trading bio. Jane Gallina AKA Airplane Jane started her career in February 2015 and has taken the day trading community by storm. As a loving wife and mother of two, Jane was seeking control of her financial future while remaining present for her daughters. As a young day trader, Jane has been able to accomplish that dream quickly, becoming one of the most successful female day traders under mentor Timothy Sykes. Through her blog, YouTube videos, and seminars, Jane hopes to inspire and empower more individuals, break out of their comfort zone, and try day trading. So welcome, Jane. It's nice to have you. It's an honor.
Thank you, Sylvia. Thank you for asking me to participate. It's always a pleasure to share with the trading community.
All right, so maybe you can start off by telling us about your journey into trading U.S. equities as a Canadian immigrant from the U.S. and why you're passionate about trading and also training as we're doing today.
For sure. Well, for me, I came to the day trading world actually after my second layoff in life. So I know there's a lot of people that are going through layoffs right now with the pandemic that's happening. And sometimes it can be the best blessing in life. It can look like a journey and a struggle while it's happening. But later on, you can see, okay, God gave me this challenge to go ahead and tackle it and turn it into something positive. So for me, I did immigrate to Canada from the US, and I was working in the airline industry. I'd been in the airline industry since 2007, and I immigrated to Canada in 2013. If you know anything about the airlines, they tend to be based on seniority. So I'd already had 6 years of seniority in the States. And then when I immigrated to Canada, it was a brand new union. And so I went to the bottom of the list. I'd still been with the company for 6 years, but I was considered a brand new hire when I came to Canada because it was joining a new union. So I came July 31st, 2013, I immigrated, and that was a journey in itself. And then I find myself pregnant. Then we come to June of 2014, I'm 8 months pregnant, and they have a reduction of workforce. So I was laid off, 8 months pregnant, and I thought, what am I going to do to go ahead and be able to provide income for the growing family, right? Because it's not a scenario you want to find yourself in, pregnant. You think, hey, my job's secure, and then out the window it goes. So you have to be resilient and figure out something that's going to work. And so my husband had reminded me of a great trade that I took $25,000 and turned it into $250,000 over the time span of 9 months. And I thought, you know what, that is a great idea. Maybe I'll go and look at trading, but I really want to do it more as a career and be hands-on throughout the day, and not just something that's pretty passive, put money in, let it sit for 9 months, and then go ahead and take it out. Yes, it grew exponentially, but I wanted to have my hand on it, the pulse of the market, and learn more about day trading. So I turned to Timothy Sykes tools when my daughter was 6 months old, and I blew up my first account. I didn't follow the rules, and so that's part of the reason why I really like to educate other people, is because I want to help them avoid the pitfalls that I had when I was learning. So I started when my daughter was 6 months old. I didn't follow the rules. I was trying to do too much right off the bat. And then finally, once I stopped with real money and turned to paper trading, that's when I really started to see success in the strategy that was going to be best for me. And then once she went to daycare at 1 year old, then I could really watch the markets throughout the day, get the time in front of the charts to start to see patterns, start to see the timing, how everything happens in the market, usually about 30-minute increments. and see, hey, do I want to be a day trader? Do I want to be a swing trader? What's the difference of the two? And slowly but surely, you know, I started sharing on Twitter, and then I started my blog, and then I started my YouTube channel, and then the summit and my book and everything else. And it all sort of, it just sort of exploded as more people requested me to share more. And that's how I've come to really sharing my journey in the day trading world to help other people, is because I like to give back what other people want. You know, what would I want when I was beginning to trade?
All right, Jane, thank you for that brief introduction. And you've mentioned your book, FMJ Trust Transition Trade. So at what point did you become an author, and how did you go about it? Were you still trading as you were doing the book? And what can people, if people took your book today, what would they come out of it with,
Yeah, for sure. I did go ahead. Actually, I mentioned that I wanted to go ahead and write a book when I was first asked to speak. Trade Ideas invited me to come and speak with them. And as a result, I said, hey, you know, I'm going to go ahead and write a book about female day traders. And when I open my mouth and I say I'm going to go ahead and do something, I usually try to go ahead and make that happen. And I put that out there in the public eye, and I said, you know what, I need to go ahead and follow through. So I looked for the book of female traders when I was starting out, and I thought this is something that other women can go ahead and turn to, but men as well. I mean, it's always good to see different viewpoints. And for me, I wrote it in, hey, I want to see about women from 5 months all the way through 25 years of experience. How did they get into the market? What was their background? How they succeeded, their pitfalls. And it was much like Momo Traders or Market Wizards in that it's an interview style book. So I interviewed some women. I originally had 10 women, 2 of them decided to drop out of the book. But it's all about women sharing to help others learn. So again, women and men can both gain from it, but I feel like it's really going to empower women to get into the trading world. And that was part of my goal in writing it, was trying to say, hey, this stigma that a trader can only be a man is something that's up here, right? Most of our struggles and our hurdles in life are ones that we create in our brain. So if somebody's going to go ahead and smash through that and say, hey, no, I can do this. Why, you know, he can do it, I can do it too. I'm a firm believer that women are pretty much 50-50. We can do the same things. I mean, maybe a little bit with physical strength, we might not be able to, but other than that, we have the mental ability to do everything. We are all humans. It's not men are greater than women, we're equals, in my opinion.
All right, and how do you get started on your day? You know, you're a mom, you're a trader, you're a wife, just take us briefly through how you start your day, and just to ensure that you have enough focus to carry you through the entire trading day. As like you said, you're a day trader.
Yeah, for sure. Let me go ahead. I did go ahead and present a slideshow. So let me go ahead and pull that up for you guys. All right. Sylvia, can you see it?
Yeah, sure.
Perfect. Okay. So again, I am Jane Gallina, Airplane Jane. And really, my typical day starts with my kids, right? That's the whole reason why I got into day trading, was to go ahead and have that freedom of the ability to customize my schedule. But they do tend to run on their own schedule at now 3 and 5. So many days, it's roughly 6:30. They come in, this isn't me, but they come in and they give me hugs and say, hey, mommy, okay, hey, it's time to get up. Come on, let's go do this, mommy. Let's go do this, which is a blessing in itself. And then from about 7 to 7:30, we go ahead and we have our breakfast. And a lot of trading to me comes from not only just sitting at your desk, but it's everything else. It's that balance in life. It's your proper nutrition, your proper hydration, the proper rest, so that your brain is going to function at the best ability that it can. You know, a lot of people, when they first get into trading, also think, hey, I can go ahead, I know how to buy and sell, but they might not understand the concept of the broker platform and actually executing the trades. That's part of that learning journey as well. So part of it for me in my trading day is that proper nutrition. We are what we eat. And if you don't have the proper nutrients and the proper hydration, your brain's not going to function 100%. I'm sure, you know, if you've ever been sick, you don't necessarily feel like you are at 100% for that day. Maybe that's a great day just to take off from trading if you're trading, or maybe it's a great day just to go ahead and revamp, look at things, watch, paper trade. You can still have time in front of the market, but be aware of what's going on for you as a person as well, so that you can devote your concentration to that trading day. In fact, we might have some little ones at my door knocking and saying hello because they are home at the moment. So I do apologize about that if that happens, but because it's just, they're so full of love that they want to share it all the time.
No worries. So,
yeah.
Yeah, you can carry on.
Okay, so then roughly, you know, 7:30 to 8:10, this is my normal day outside of quarantine and pandemic, which is obviously a little bit different. So then usually 7:30 to 8:10, we're on a time schedule, right? Because the market does open at 9:30, so I have to back my day up and follow through with that timing and schedule. So 7:30 to 8:10, taking them to daycare and off to school, which sometimes can be a struggle at 3 and 5 to get them dressed, they don't quite understand the concept of running on a schedule at that age. It's all about having fun. So that can be a little bit, that's probably like the most stressful part of my day, is trying to make sure that I get them out the door on time and we progress forward into our day. Then 8:15 to 8:50, I'm going ahead, and this is when I'm starting to build my trading plan for the day. This is the time in which everything else is tuned out. I've got blinders on. I'm concentrating on the market, because when you have that trading plan to go ahead and set up your trades ahead of time, it's much less thinking when it actually comes to the trade, right? If you were to go on a car ride, right? You're going to go ahead and likely look at a map. You might look at Google Maps, whatever it is, you're probably going to go ahead and create that journey, and you'll know where you're going to potentially stop for gas, where you're going to stop for, you know, a pit stop for food and restroom break. So in the same way, you want to know your trade before it happens. You want to set up that trading plan before it happens. Where are you going to enter? Where are you going to set your risk, right? Where's your stop for getting out? Where do you want to take profit? That's really important to know too. You don't want to freeze and be a deer in headlights. Hey, you know what? I'm in this trade. I saw it go up as a long, and then I saw it go back down. I never took profit. Well, even if you go ahead and you take 50% at the top, guess what? You're green on the trade. If it comes back to your entry, not a problem. No matter what, you're green on that trade and you've had great risk management. So it's all about setting up that trading plan early in the day so that you are not stressed when the market opens, right? You're not in a stress scenario. You never want trading to be stressful. In fact, you want it to be sort of monotonous. You follow your trading plan and that's it. You can have some good trades that you're happy about, but try not to throw the emotions into it. I also follow the dark pools. So when we see a very big dark pool print, like 40 million on a security, that's pretty big, right? That's a big hedge fund that's making a trade, and 40 million times whatever that price is, that's a pretty large position. We saw 55 million on the SPY back in February, which is roughly $16 billion before the market dropped. Were we prepared? Yes. And we just didn't know which direction at the time. Then once we saw it start to break down, we capitalized on that big time. So how I set up my checklist for my watch list is I'm going to go ahead and set it up so that I have certain criteria that's going to make the cut to be on my watch list. First of all, by 8:15 in the morning, it needs to go ahead and have 100,000 shares that have been traded at that time. Whether it's a stock that has, you know, maybe 10,000 shares traded on a daily basis, or maybe 100,000 shares traded on a daily basis, if it's got that volume, then it's going to be one that I'm interested in looking at. And it needs to have a clean chart so that I can see that the profits are going to be easily made, whether it's to the long or upside or to the short downside. So I really go ahead and use Trade Ideas as my stock scanner. I'm going to use this because it has amazing customizability, and it's just a very easy tool to use. It takes a little bit of time to get to know the platform and how to customize it to your liking. But you can also see here, I do have a link. If anybody wants to try it, just go to bit.ly/freetraderoom and you can go ahead and try it out for free. They are open from 9 a.m. Eastern time, so New York time, till roughly 3:30 p.m. Eastern or New York time. And what I really like is you can go ahead and sort it and be really picky. So this screen right here, this is what I'm really looking at in the morning. So I'm going to look at the up gappers and the down gappers. I'm interested in stocks that have volatility and volume for the day. That's what's going to go ahead and make it a stock that I want to see and potentially put on my list. So again, I want to look at that volume first. So this is my volume column, and I want to make sure that that's above 100,000. Then I'm going to go ahead and look at the position for the lifetime of the stock and for the range of the year. I want to know, hey, is this a stock that's breaking out, or is it a stock that's hitting 52-week lows? Because many times you will see it will continue in that direction as well. Then I want to know, is this earnings? Did it have earnings today? Do I need to be cautious about potentially holding it overnight? If I'm in a trade, hey, it's, you know, potentially a swing candidate, am I going to go ahead and hold it overnight? Or am I going to sit on the sidelines because earnings are going to go ahead and happen that night? When earnings announcements come out, I like to be on the sidelines. Trading up to earnings and then sitting out overnight and then the next day, great. But I don't want to go ahead and risk that capital because it's a 50-50. We just saw that Microsoft and Intel just had better than expected earnings. And what happened right after that when the market opened? Boom, they tanked. It ended up being a point at which, in my opinion, the big guys were jumping in to go ahead and take it up higher. But they went ahead, and the big guys are going to control the market, being the hedge fund players, everything like that. They are going to go ahead and move the stock. So even if it has great earnings announcements, it can sometimes drop. And that's what we saw happen. The next thing that I want to look at is the float. So what is the size of the float of the stock? Best way to visualize the float of the stock that can be traded is, say you go to a grocery store. They have 100 apples, right? And 30% of those apples, or 30 apples, are set aside for restaurants, right? So that would be the institutions and the insiders' ownership. Then the remaining 70 apples would be considered as the public float. So we have the outstanding number of shares, that would be the 100 apples, and then the public float with it would be the 70. So I want to see, hey, is this a low float? Is it less than 20 million? Do I really need to be cautious about this? Because as quickly as they go up, they can go down. Kodak and Blink were two of the examples of that this week. Tends to be a low float momentum, short squeeze type play where you have almost a rocket ship price action going up, and then you have a drop like a rock going down. With Kodak, it had 6 halts 2 days ago during the trading day. And its high was $60, and then in the next 5-minute candle it was down to $27. So you need to be aware of the size of the float, because it can tell you how volatile that stock might be throughout the trading day. And then this is an example of my results of my watch list. This is actually my watch list from yesterday. So you can see I do have it available on my website, cjanetrade.com, and I break it down. So I have the potential longs and I have the potential shorts. Why do I say potential? Well, that's the momentum for the day, right? At the moment, these are gapping up, and so maybe it's going to continue to the upside, but I'm going to go ahead and I'm going to create the different levels. I also try to break it down with a little legend right here. Hey, if it's in bold, it either had earnings after hours yesterday or this morning pre-market. So you already know, hey, I know that that's an earnings trade. If it's in italics, that could be earnings after the market close or the next morning. Low float right here. Hey, this one is 20 million. Watch out. That could be a little bit more volatile. If you get into it as a potential short, please be aware, because as quickly as it goes down, again, it can reverse on a dime and squeeze those shorts. So details of the list as I break it down. So I have that momentum. Is it going long or short for the day? Where did it gap in the morning? Then I also look at that float, right? So is it going to be a lower float, or is it going to be a really big one like QCOM or Qualcomm? And does it have a large daily short percentage, right? What is that short volume from the day prior? I'm also looking at this because if a stock has a large short volume, meaning yesterday we have volume that was traded. Every day the volume is reported to FINRA, and they will report how many shares were long and how many shares people shorted. So sometimes you'll see that the short volume will be low. It'll be 20%, 30%. Sometimes you'll see it at an extreme of 83%. So if it's gapping up and it happens to be a low float stock and it has a higher short volume percentage from the day prior, there's a good chance that that could end up with a short squeeze, which would make it an easy profit to go ahead and capture those shorts that are being squeezed. What do I mean by that? In shorting, when you go ahead and short a stock, you're anticipating that that stock's going to drop, right? So if that stock goes against you and it starts to go up, you're at a loss. Well, you might end up with a margin call from your broker, or you could likely just want to get out of that trade. So that is going to increase demand to purchase. Then you also have people that are buying. So the regular momentum traders. So when you have the two together, that's what creates that rocket ship short squeeze, because you have double the buying that's happening. The shorts are getting out, the long traders are getting in, and up it goes. Now you can also find the next step you see I have here is your support and resistance. So I go ahead and I find that support and resistance based on the charts. I'm looking at my 15-minute chart right here, and I'm looking, hey, if it goes ahead and it breaks the resistance, that ceiling level, then I want to go ahead and see it break it, and break it with volume as well. So we tested, there was volume that came in. Hey, look, this second time around, where did we go? We launched right through that and up to the upside. Now I also have the support. Hey, if it breaks the support, it might be a great short trade to the downside, but it might also bounce off of that level. It proved it in pre-market. So let's go ahead and see, is it going to break down, or is it going to go ahead and hold a support? Sure enough, yesterday, it came down, tested. This is also the 50 simple moving average right here on our 15-minute chart. Came there, tested that once, tested it twice, tested it 3 times, and then it went ahead and a little bit of a nice long trade right off of the 50 simple moving average. So you could use this as well, the support, as a potential long entry if it does hold, and set your stop just below. vice versa. You could also use a resistance as a potential short entry and put your stop just above. But know that if it goes back to it and it tests it again, then you could likely see a breakout. For this could be all of those shorts as well that set their stop just above, boom, a quick run to the upside, a bit of a squeeze on the shorts, and the longs are getting in. If you guys have ever read Reminiscence of a Stock Operator, in there, Jesse Livermore talks about the high probability trade of a certain level being broken. One of his friends said, hey, why don't you want to get in at this level? He said, you know what? I'm going to wait for it to go ahead and prove itself and break a certain price, because then you're going to have a higher probability trade once that price level is broken. Sure enough, did it really break this one? No. Came up here, tested it. Once it broke it, there's your higher probability trade. Now, if you guys have any interest in checking out my watch list, I do go ahead and send it out between 8:50 and 9 a.m. Eastern. You can just find it right here. This is my website. And you can go to shop right there. And then the way you view it once you've signed up is you just click on the daily watch list. And you will get that watch list that I just showed, as well as charts broken down. So each one will go ahead and have a chart as well as the watch list. So you get to see the chart, you get to see the watch list as well as the chart. And I also put the daily announcements for around the world there as well, because you want to know, hey, are we having an FOMC or a federal announcement that might be changing the market? Do we have Trump scheduled to speak that might create some volatility in the market? Hey, if he's talking about Tesla and shooting out a tweet, Tesla is the new best electric car maker and it's made in the US, that can affect a stock. So seeing the announcements that are there ready to go is very important as well. After I do that, I'm going to go ahead and map out my targets. I use TrendSpider for that. They have a free 7-day trial if you guys are interested in testing it out. And what I really like about TrendSpider is I'm able to go ahead and put a 45-minute chart laying it over a daily chart. So you guys can see the dashed lines right here. This is going to be my EMAs on a daily chart. So I want to know, hey, is it coming back to my 4 EMA that's going to potentially create a support level, right? If I've been trading, I might not see that unless I had 2 charts side by side. So it's very cool to have that ability to go ahead and put it on top of each other, as well as these trend lines. I'm going to use those trend lines as well as potential targets, right? So yesterday, funny enough, came down, right? We had a support level right at this trend line. Then once it broke out on top of breaking my resistance level, came on up and hit the upper trend line end of day as a potential target. So you can see, you can create those targets based on trend lines. There's lots of puzzle pieces to put together, and that comes with time. For everybody that's new, don't worry. It takes time, and the time that you study the market and you put actually in front of it to learn it, it will come together for you. Nobody is born perfect in trading, and there is no perfect trader. So know that when you get into trading, you're not expected to be perfect. You're expected to have, hopefully, a winning ratio of at least 70% to 30%. And as long as you keep those losers small, your account will continue to grow. So after that, I go ahead and I log into the 2 trading rooms that I'm in. Roughly 9 a.m. I'm there until about 11 a.m. I say that because I work in the training pit as an educator there. We do have 4, and I teach on Mondays and Thursdays there. So this is a beginning room where people come in to learn. They're learning about trading. They're learning about the dark pools. They're learning about setting up their software. They're learning about the trading psychology. They're learning about that big picture of how everything else in your life could potentially influence your trading. So it's a very cool room. One I wish that existed when I was beginning to trade. And then there's the Java pit. That is more advanced. If somebody's coming to the training pit and they test out the Java pit, they're going to be like, whoa, this is way over my head. I have no idea what you guys are talking about, which is why the training pit exists, because this is more for experienced traders, traders that have been fully trained. They understand how to trade. They understand what we're talking about with the dark pools when we're talking about breaking that support and resistance level, or bullish above level and bearish below level. And they've seen it, they've had some time in front of the computer, and they've been educated with it through the dark pool boot camp. So these are the two that I log into, where you guys can find me every day. And usually I will teach from 11 a.m. until about 12 p.m. on Mondays and Thursdays. Other times I'm also doing private one-on-one coaching, and so sometimes that's in the afternoon, but usually I'm in these rooms consistently for that 2-hour span, many times until 12 o'clock. Actually, I should change it to 12. And then the rest of the day, I really try to devote to my kids and being with the family. That's the whole reason why I got into it, was to go ahead and have that flexibility. And in that time frame, you can see it's not just the time in front of the computer. I also end up my day just about 7 o'clock. I will go ahead, and we have a proprietary file where we have all these cool things about the dark pool, some really cool stuff where we somewhat crack the code of Wall Street. And so I help with some data input there at the end of the day. And then that's it. You know, really the afternoons, evenings from 5 to about 7 o'clock is 100% devoted to my kids. When they are in school, at the middle of the day, 11 to about 2, I don't really like to be into a trade. I don't like to enter into a trade, because that time there's less volume, there's more manipulation by the algorithms. And so that'll be a time where I'm going to go ahead and I'm going to step back, go have lunch, go to the gym, go maybe get my nails done, do something that takes me away from the market so I'm not tempted to get into a trade that I shouldn't be in. My winning ratio during that time of the day is not the best, so why subject myself to it, right? Go ahead, clear my mind, step away, and come back at the end of the day. In fact, I really love, you saw my charts that I use, that is TradingView. And I love it because I have access to that on my phone. So I can set up my alerts there. I set up my chart levels first thing in the morning. Then if I'm away from the market, I get a notification on my phone early in the morning. I can go ahead and, or even if I'm out at the grocery store, I've been known to trade in the grocery store parking lot because I got a notification on my phone. Hey, this is it's hitting my target. I'm in a trade. It's gone well all day. Time to go ahead and take profit. So you guys can follow me pretty much everywhere. I'm on Twitter, I'm on Instagram, I'm on YouTube, LinkedIn, Facebook. I have my website, tjanetrade.com. I'm also on Ticker Talker. If you guys want to see me building my watch list every morning, I am live doing that on Ticker Talker. And then if you all ever have any questions, feel free to reach out to me. I'm very accessible. I love hearing success stories about how I've helped other fellow traders turn into a successful trader from zero knowledge. So you guys can always reach me, jane@cjanetrade.com. And then I do have my YouTube channel. Sylvia knows I'm quite active there. I just started a midday market update at 12:15 Eastern, Monday through Friday, or every trading day that the market is open. And it's just a quick 15 minutes. Hey, let's see what happens in the market. What are we seeing? Where are we going from here? Sundays, I do my watch list live. And all the times I do my live watch list or my live streams, I am answering questions too. So it's a great opportunity. If you have questions and you want to have them answered, just bring them to me. I'm happy to answer them to the best of my ability. That's a lot of sharing with my kids. Sharing is caring, right? So when I'm sharing and helping you, there's nothing better than that fulfillment of seeing how somebody else has changed their life for the better. All right, so do you all have any questions?
Yeah, so thank you for that practical approach to how you do your analysis. Maybe you can tell, for those people who are relatively new into trading, what can you tell them, especially the stay-at-home moms and dads, about the opportunities trading presents when it comes to trading different asset instruments? I know you've showed us the stocks list. So what can you tell guys who are at home right now because of the pandemic and what they can capitalize on right now?
Yeah, definitely. Well, first of all, I highly recommend paper trading. Go ahead and put in that time to study and learn. As much as somebody wants to just go ahead and jump into the market, how many surgeons do you know that the first day of medical school, they were able to perform a surgery? Or an Olympic athlete that was saying, hey, I want to go ahead and I want to be the best at, I don't know, track and field. How do you know that you're going to be successful at it? In my opinion, you really need to go ahead and practice first. Go ahead and take that education step first. Go ahead and educate yourself on it. If you want to turn to trading as another source of income, put in that time to study, because the market will quickly take your money. The algorithms are really written to mess with people psychologically. And if you're not aware of it, if you're not anticipating what could happen, if you happen to enter at the wrong time of day, it could really hinder you. And then you're going to be dealing with that psychological aspect of potentially making losses because you didn't know what you were doing, versus just concentrating on the educational part first.
Right, and maybe you can tell us your take on risk tolerance and adopting clearly your structured approach to trading is something you have developed over the years. So how do people go about that,
Yeah, well, what's really important is, again, that trading plan from the get-go. If you have a $500 account, you're just starting out, you might have $500, you might have $2,000. You don't want to jump in with 100% of that right off the bat. You want to go ahead and keep your risk small. In fact, we trade options a lot of times. Just had an option that should be going from roughly $25 up to $250 overnight, because of knowing where the dark pools are, where it can go from here, but keeping that risk very small and the reward bigger. So if you have a 1 to 5, 4 or 5 ratio, so say you're willing to risk maybe 5 cents to make 20 cents on a trade, that's going to be a good risk management ratio. You don't want to have big losses, right? You potentially have one of 4 outcomes. You can have a great trade where you make lots of money. You can have a small win where you're going to make a little bit of money. You can have a small loss. Hey, you followed your trading plan, but that could be the best trade of your day or of your week because you didn't let it turn into the 4th trade, the catastrophic loss, which could be blowing up your account. It could be losing 5 times the amount that you anticipated in potentially losing on that trade. So really going ahead and being diligent and sticking to those stops, whether it's a mental stop or a physical stop in exiting to get out, stick to getting out and having small losses. Because as soon as you can master that, then you're going to go ahead and be able to stay in it much longer because you are managing those small losses.
Right, now I welcome my colleague to Gilbert to help us with the questions from the participants.
All right, thank you, Sylvia. Thank you, Jane, as well, for that wonderful presentation. So I have a few questions coming in from our participants. Okay. One question from Caroline. She's saying that if you could repeat the name of your book again and also advice on where people can find your book.
Yeah, for sure. So it is Trust, Transition, and Trade. Well, FMJ, Trust, Transition, and Trade. If you Google book by Airplane Jane, it should come up, or Jane Gallina book as well. You can also do that, and it should also find it. And it is available on Amazon, so pretty much everywhere around the world. And it's available in ebook as well as paperback or hard copy.
All right, thank you. We have a question from Mwenda Gitonga, and he's asking where to start trading stocks, if there is any resources that you could recommend, books and also websites for someone who is beginning to trade stocks.
Yeah, for sure. Actually, I just put up a YouTube video the past couple of weeks. So if you check it out, how to leave your 9-to-5 job and how to begin trading. And that has a lot of great resources on it. So I don't really need to rehash it too much, but it's got a lot of great trading books there, a lot of free YouTube videos and different trading communities in the trading world that are very supportive. Sometimes you're going to find a trading community that might be very ego driven. Hey, I made this much in profit today. You need to find the community that's going to be best for you. In trading, there's not one trading strategy that's going to be a blanket for everybody. The basics of buying and low and selling high, or selling high and buying low, remain the same. But the actual nuances of it, the amount of time that you put in front of the computer, the amount of risk that everybody has is different, and their knowledge as well is going to be different. So check out that video because it's really going to enlighten you, and it's got a lot of content that I can't mention in just a couple minutes.
All right, thank you. So I also have my own personal question, and this is to do with your journey into trading. You talked about how you got to know Timothy Sykes, who's a popular penny stock trader. How did you begin your journey in penny stocks, or at least learning how to trade penny stocks? And at what point did you transition from penny stocks to the mainstream stocks? And also, do you still trade penny stocks or not exclusively the mainstream stocks?
Yeah, for sure. Well, when I started out, I think a lot of people are drawn to penny stocks for the simple reason that they look at this is a lower cost stock, and so therefore maybe I can buy more shares of it for potentially making more profit. But in essence, when you are trading, what I found was I originally started with it. That was back in February of 2015. Then I went through my paper trading journey, and I started really, I studied all of his videos, and I was looking at the risk management aspect of it. And once I went back to paper trading, I saw, it is higher risk to me to take 1,000 share position of something than taking maybe a 20 share position. Because if that 1,000 share position moves 20 cents against you, that's going to be $200 loss, right? Well, if you have 20 shares, then you can have it move $10 against you. And that's a bigger move. So you can see that your ability to get in and out, if you have a smaller position, you can give it a little bit more space for that risk tolerance. So you could have that same amount of capital and just put it into a larger cap stock that might have a bigger run. In fact, Amazon had earnings, right? And Amazon right now, I think, is up $120, maybe even $200. So if you had one share of Amazon, you could have made $200 overnight. Granted, it was earnings and that's a bit riskier, but you can see if you don't necessarily have to have a super large number of shares to be able to make a nice profit. And so that's where, for me, I don't trade them as much now. I do, but not as much. I was in Ego, which is a Canadian gold stock. Sylvia had also asked me about different areas, right? So commodities right now are great because what is happening to the US dollar with all this printing of money? Well, the dollar is being devalued. What happened in 2008 to 2011? People went to the metals as an area of security. They tend to go ahead and increase because people actually want that physical metal. And as a result, that higher demand is going to increase the price of the futures as well as of the stocks in that sector. So back to penny stocks, I do trade them, but not as often now because the share size tends to need to be higher to make that same profit that I could make with a stock that is going to have a larger daily range And if I can get into a larger daily range stock and I can get in with a smaller position, to me, that's going to be a smaller risk.
All right, thank you.
Yeah, my pleasure.
Sorry? All right. Then Mwenda is also asking if you trade Forex. Have you traded Forex before? And do you find the concepts being similar to stock trading?
I believe that once you learn the technicals of how to read a chart, you can apply that to pretty much anything, right? So if you understand how to read a chart technically for an equity, you could transfer that to futures, you could transfer it to Forex, you could transfer it to crypto. So it's going to be, once you understand that concept, now some of them will act a little bit differently. I feel like there's more manipulation with the equities, with the algorithms and the high frequency trading than potentially the futures. And seeing the different targets as well. Learning how to trade with targets can be crucial in getting out with a profit. Don't get greedy.
All right, thank you.
Yeah.
So I also have another question with regards to day trading. Day trading has its challenges. And of course, it's not an easy thing for someone to start as a career. So for those who are looking to begin a career in day trading, what kind of advice would you offer them?
Number one is be kind to yourself in this journey, right? I wouldn't expect you to be perfect. I've been now doing this for the past 5 years. And so know that you cannot be perfect right off the bat. It's gonna take time, and be kind. Practice, get the risk management down, find your strategy, and then progress forward with real money, in my opinion. Because until you understand what you're doing, you could just be throwing money down the toilet.
All right, thank you. I also have another question regarding capital. What kind of capital would you advise someone who's new to trading to start with, and why?
Yeah, for sure. Well, in the US, we do have the PDT rule, which can be a bit of a hindrance, but I also look at it as a bit of a positive for a newer trader. The reason is, well, the PDT rule is going to be if you have a US account with less than $25,000, you're subject to the pattern day trader rule, which means you cannot do more than 3 day trades, so buy and sell or sell and buy, in a 5-day rolling period. The reason why this could be good for a newer trader is they're not going to overtrade. If they're losing, they're not going to revenge trade and create bigger losses. It can be a bit of a hindrance though, because if you might want to go ahead and get in to a trade and you scale into a trade, you might have 2 or 3 entries you're adding to your position, and then finally you hit your first target and you want to take a partial profit. You would have to hold the rest of it overnight. So it's not so much the entries. If you could have 4 different entries and 1 exit, that's going to count as 1 day trade for the PDT rule. If you have 4 or 1 entry and 4 exits, that's going to count as 4 trades. So in the US, I would recommend at least $2,000 US, because it's going to give you marginability. When you go to your broker, you're going to be able to open up a margin account as opposed to a cash account. What's the difference? Cash account means that when you make a trade, if you trade it today, you go in, you go out today, and today is a Monday. You're not going to have that cash settle into your account until Thursday. So you have trade date plus 2 days of settlement. So when you have a margin account, what you can do is you can reuse that capital the same day. You have a bit of a loan agreement with your broker, and it is making that cash quickly accessible instead of having to wait the 2 days. So I would say at least $2,000 US, so that you have that ability to go ahead and have the margin agreement. However, if you are in the US and it's less than that 25,000, you will still have to abide by the PDT or pattern day trader rule. Now, elsewhere around the world, I would still recommend roughly 2,000 USD, because then you're going to go ahead and have a little bit more cushion to practice with. But hopefully you've practiced on paper first, so you know what you're doing when you get into the real money.
All right, thank you. And Nancy is asking that, Nancy Onjiko is reminding you that you haven't answered the question on whether you trade Forex.
Oh, I'm so sorry about that. I do not trade Forex.
All right.
Crypto a little bit, futures, paper trading, but mostly equities.
All right. What are the reasons maybe? Is it just due to your strategy or any particular reason why you've concentrated mostly on stocks?
Yeah, when I went to my first trading summit, which was a trading summit put on by Timothy Sykes, he actually had a former market maker for Forex speak and say, I wouldn't touch it with a 10-foot pole, and I worked in the industry, because the spread between the bid and the ask are so manipulated that it can be very hard to make money. You're already in a losing trade right off the bat, because if you were to buy on the ask and sell on the bid, the spread is big. And people can get into a lot of trouble with the high leverage ability of their money. So they could go ahead and risk a lot of money that they don't necessarily have because of the marginability. And as a result, that can end up with them having a big loss to their broker. So after hearing that, right when I was starting, I said, you know what? I'll just sit on the sidelines. There's enough with the equities market. I don't need to get into Forex. I mean, for everybody that does it, kudos to them. Not my cup of tea. That's okay. There's enough. There's billions of dollars in the market. I'll make money elsewhere.
All right, thank you. Then there's someone who was asking more to do with your training, where you offer your training. What's the website? What's like your course outline? Like, what do you usually cover in your training?
Yeah, for sure. So it's at thedarkpools.com, and you just go to the training pit, and as you can see right there that it's a live training room, and we are open 24/7. So if you go ahead and you sign up, it is $99 US, and you have a webinar every day of the week, if not two. So we have 2 webinars on Mondays, 1 on Tuesday, 1 on Wednesday, 2 on Thursday, and 1 on Friday. And these webinars cover, as I mentioned before, it's going to cover the basics of a stock, basics of an option, risk management, also setting up software, all about the dark pools. So there's a large variety. If you actually go to the website, you can see all the things that we do cover while we are doing our webinars. And those are recorded too. So for people that cannot necessarily watch them live, they can download them and they can watch them at their leisure. We do take down the links for each week on Saturdays, so that all the new people that come in don't have access to the months of videos, just to be fair to the people that have already been in the room.
All right, thank you so much. I believe that marks the end of our Q&A session. In case there's anyone who has a question, maybe you can quickly send it on the Q&A section or on the chat section. So I'd hand over to Sylvia, maybe to take us through the next section.
All right, I think that was good, a good Q&A session. And maybe in conclusion, I think, Jane, you can repeat the name of your website and where people can access your book from Amazon, the links. And if anyone wishes to reach you from social media, which is like your most active social media handle where you interact with people, you know?
Yeah, for sure. Well, probably the place that I'm most active is on Twitter. So I am very active on Twitter, and you guys can reach out to me there, send me a message there as well as Instagram. The two of those I'm fairly active, and they're open. If you guys have a question, you can always send a question via there. Or you can go to my website, CJ Trade, pretty easy to remember. And you can also email me at jane@cjtrade. And I'm very active as well on YouTube and sharing content. And really, if somebody has a question of something they want to see explained in a video, I try to go ahead and answer that and put it back out for everybody to go ahead and help everybody, so that it's not just, hey, this is content that I want to see. No, it's really helping people, taking what they want and putting it out there so they can learn from it. So there's a lot of great things. I've got a lot of beginning learning to trade videos there, as well as that video I just put up recently about how to leave your 9-to-5 job, a little checklist of what you can expect, and timeline too. I'd say roughly it takes about 9 months for people to be able to go ahead and get into the trading world comfortably. Everybody does do it at their own pace. So if you take a little bit longer or a little bit shorter, don't be frustrated or be super excited. It's also the time that people devote to it in studying the market. As far as my book, again, you can reach it on Amazon. It is FMJ, which means beep, my job, and Trust, Transition, and Trade. And it's a great book. That's what everybody wants to say their job, right? Just to go ahead and move forward, set your own time schedule. I have the ability to work anywhere in the world. If I go on vacation to the Dominican Republic, which I did in February, thankfully before everything happened, I was able to go ahead and work from the hotel room. All I need is an internet connection and my computer. Another great book that might be inspiring to people during this pandemic time is Tim Ferriss's 4-Hour Workweek, which really helped me to see I don't need to work a 9-to-5 job in an office. I can set myself up with success to work anywhere that there is an internet connection in the world.
All right, thank you so much for that, Jane. We also thank you for your time. We do appreciate, and we'd love to have you again on the lounge in the future, and we do appreciate your time. So thank you so much. We'll let you go now to attend to your babies.
Thank you, Sylvia. Thank you all. And thank you for asking me to participate. It's always a pleasure.
All right. We've learned a lot from you, and we will share the same with you after we do the editing. For now, thank you and have a good day. Goodbye.
Thank you. Thank you as well. And if you want any of the links, I can shoot them over. I'll shoot them over to you right now in an email.
Yeah. All right. And then we'll link them up on the show notes as well.
Perfect. Perfect. Sounds great. Thank you guys, and enjoy your afternoon.
All right.
Thank you, Jane. Thank you.
Bye. Thank you.
Thanks guys for tuning in and sticking with us to the end. We hope you have learned something new. I would like to appreciate Scope Markets for sponsoring this webinar. Remember, you can open a live trading account with Scope Markets and apply the lessons shared by the guest in this webinar to your trading. Many thanks to our guests for speaking to us. We'll be open to have you in the future. Till next time, goodbye.